Hey guys, what is going on? Welcome back to the portfolio. Again, as always, want to thank you guys for all of the support on the channel, all the subscribers, all the viewers out there. Definitely appreciate all of your input with regards to content for the channel. Definitely appreciate all of your video suggestions. Definitely have a backlog building up of video ideas. Hope to get those out over the next couple of weeks or so. But again, I want to tailor the content to what you guys want to see on the channel. So please keep all of those viewer suggested videos coming in. Definitely appreciate that as always. I want to talk a little bit about my options trading. But first I want to comment on the market. As you can see up on top, a very bad day overall in the market. Not only for my portfolio, but for the market in general. My portfolio, as you can see, down 2.67%, 5,085.35. So a very, very bad day. One of the worst days that I can remember over the past couple of years or so. There's been days I've had a larger drop, but this is definitely one of the top 10 one-day drops in the portfolio. But importantly, as you can see on the bottom, dividend paid 2 hours ago, Ford 15 cents per share, and that large credit there of $1,080. So finally got that credit in the account. Was a day late, but it is now in the account. As I had mentioned on prior videos, had full confidence that this would get paid, and luckily it looks like it's getting paid today. I don't think it showed up on the balance. I don't think I was down 6,000 plus with regards to the overall rate of return, so that will probably be credited here shortly. But not a very good day in the market. Let's hope it rebounds here. Tomorrow there will be a holiday, no stock market trading, but then it will pick up on Thursday and Friday. So we'll kind of see how the end of the week turns out here. Again, a limited week, 1 day of holiday tomorrow. But let's go down to the options trades. There's been quite a few viewers wanting to know a little bit more about my options trading. I do this in a very conservative fashion. You can get very complex with regards to doing these types of trades. Iron condors, there's all sorts of different ways in which you can bundle a couple of different buy orders and sell orders together to limit risk. But for the most part, what I'm doing is covered calls as well as cash covered puts. So I'm not doing any naked trades, meaning that theoretically your loss could be infinite. Not doing that type of trading. This is much more conservative, looking to get about 5% or so optimistically for rate of return on these trades. So far I'm doing around 4%. This last set of trades here, which will span over the next 2 weeks, will be around 3% or so. All of these trades that I did today, you can see a number of trades with AT&T up on top. T30.5 put sell, 3 sells, T30 put sell, 1 sell, and then a Ford 9 put sell, 10 sell. So those were the 3 trades I made today. Right at $199 for the overall dividend that I got for that, or options premium, I should say. It's not a dividend, but it is essentially a cash premium that is paid to your brokerage account. $199, if you translate that overall in the portfolio, $185 for the portfolio value. That's right, just under 3% rate of return. And I want to emphasize that, again, this is a very conservative way of doing this. You can do a very more aggressive trading patterns. You can start linking buy and sell orders together. A whole host of different ways you can do options trading. But this is the way I'm doing it on my portfolio. This is very conservative, and this is only done in stocks that I'm more than happy to hold for the longer term with regards to my put sells. Remember, for my prior videos, again, if you guys are new to options trading, take a look at those videos prior to this video. It'll give you a little bit better idea of what's going on with the portfolio here. But a put is a buy, so I'm basically obligated to buy 300 shares of AT&T at $30.50, and then I'm obligated to buy another 100 shares at $30. So put is buy. If you sell off a contract, you're obligated to do that contract, and each contract is 100 shares. So 3 sells is 300 shares, 1 sell is 100 shares. Again, if that is somewhat confusing, take a look at my prior introduction videos with regards to options trading and then come back to this one. So why did I jump into these trades? Well, I'm more than happy jumping into AT&T. You can see on the bottom left, $30.80 is the current stock price. More than happy jumping in at $30.50. That's why I went ahead and did this trade. It's basically like you're getting paid to do trades that you would do anyway. On the bottom, you can see 2 contracts for 27 cents each, $54 credited to the account. Again, each contract is 100 shares, so you take that 27 cents times 100, In that last case here, it's times 200 because I bought 2 contracts. 29 cents times 100 is $29. So both of those were credited to the account. And then I can go ahead and sell these contracts off if I would want to. As you can see on the top here, those current 3 contracts, if I were to sell off, would be $105, hence the negative 105. If you combine that with the options premium I received, the total return would be negative 22. So I wouldn't want to do that. But as more time elapses, that total return will start going back to 0 if it is out of the money. But for the current portfolio, I'm going to keep those contracts, keep the premium, and then if it does trend down under $30.50, again, more than happy picking up the stock at that price. Hopefully it doesn't trend too far under that 30.50 or I'd lose money overall on the trade, but that's the risk with this type of trading. Here you can see a little bit less risk here. I would have to buy this stock for $30 per share. Just got 1 contract here. Again, on the bottom you can see that trade. 1 contract, 16 cents per share. Times 100, that'd be $16 options premium. And again, you can buy and sell these just like stocks. If I were to go ahead and sell this off again, I'd have to buy it back at $20, hence at negative 20 for a negative $4 return. So again, wouldn't want to do that at this point, but if AT&T does start trending up later this week, I can make money by simply selling off these contracts and then buying them back at a lower price. And the third contract I did today was with Ford, $9 put. So essentially, if Ford gets under $9, I would have to buy Ford for $9 per share. You can see I did 10 contracts. On the bottom, you can see 10 cents per contract. Excuse me, 10 cents per share, 10 contracts. So 10 cents times $1,100 there. So I'm essentially obligating myself to buying 1,000 shares of Ford. More than happy to do that at a $9 price point. And if Ford does start trending up later this week, this contract will become less valuable. I can buy it back for less and then make money simply buying and selling the contract if I were to do just that type of trading. Or I can hold it until expiration. Hopefully it expires, and I would simply keep my options premium, and all of the cash collateral that I have up on all of these trades would simply be put back in my account as trading capital. So that's what I'm doing with the portfolio. Again, these are very conservative trades. I only do this type of trading, put sells with stocks I'm more than happy to hold for the longer term, buy and hold stocks, and only at price points that I would be comfortable getting into a stock. So that is what I'm doing with the portfolio. Currently, this is yielding about 3% or so overall rate of return for the year, about $5,200 or so yearly. Again, these are very conservative trades. I can do this in a much more aggressive fashion and make 10, 15, 30, even more than that rate of return on trades. The only caveat is that more of these trades will be assigned to you. Whether you're doing put sells, you'd have to buy stocks, or if you're doing sells with regards to calls, you'd have to sell off your stocks. Has some tax implications for the call sells, and for the put sells here, if the stock continues to trend down, you'd have to hold this for a little bit longer term. You'd have your capital tied up in the stock until you could trade off the stock in a positive swing trade. Another caveat that I should mention as well is I only like doing this in stocks to have good dividend income as well. So if I did have to buy AT&T with this particular put sell, or this one, or if I had to buy Ford with a put sell, more than happy keeping this stock in the portfolio, even if it starts trending down under $9 for Ford, $30 or $30.50 for AT&T. I can still pick up that nice dividend while I wait for a positive swing trade at some time in the future. So those are my trades. Again, about 3% or so with very conservative trading. These are all cash covered puts. So this is not unlimited risk with regards to naked puts. Essentially putting no capital up, no collateral up. You could essentially lose quite a bit of money doing that. This is something that I simply have in the portfolio. Cash sitting there, thought I would use it for some put sells to make a little bit extra income on the portfolio while I wait for longer term positions. And again, if these stocks do trend down under the strike prices for AT&T or Ford here, I'm more than happy entering into the position at that price point and then waiting with the great dividend yield on both of these stocks. I think the stocks have covered dividends for the next couple of years. Not at all worried about them losing the dividend. If I did think they were going to lose the dividend, I definitely would jump out of both of these stocks. That was another question on a prior video. Why do I like Ford and AT&T so much? That's essentially the reason why. I think they have very safe dividends. If I thought the dividends were not safe, I definitely would not be putting more capital into each of these stocks here. Again, for my AT&T trades, look at my prior week's video. Just did a video with regards to selling off some of these AT&T stocks with covered calls. So that is the portfolio. Again, trying to tailor some of the content to what you guys want to see on the channel. Quite a few videos discussing, or at least requesting, what types of stocks do I jump into with my options trading. And this is definitely the type of stocks I like to trade with. High dividend yielding, blue chip companies that I'm more than happy to enter into a position at a particular price point and then holding for the longer term, picking up that great dividend income. So let me know what you guys think about these trades, if there are better stocks that you utilize for your options trading, or if you guys employ more complex strategies on Robinhood. But not to make the video too long, I'll kind of end it here. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until the next video, we'll see you then.